All right, everyone, a very good morning. Right now it is 11:52 Indian Standard Time and 10:24 Dubai Standard Time. A very good morning to each and every one of you. Before we proceed for today's live streaming session, I just want to make sure that my voice is audible and I hope people can see me, right? Let me make sure all the settings are in place. All right. I think we are good to go. All right. We are good to go. All right. Very good morning once again. Today is the 15th of November. Today is a Friday. I hope everyone is having a great morning. And I'm pretty sure everyone is getting ready for the weekend, right? Imagine the entire week flies so quickly, right? Everyone is busy working during the weekdays, and the moment Friday comes in, people are getting ready for the weekend. So I can see Sophia in the chat box. I can see Sophia in our community. A very good morning, Sophia. I hope you're having a great morning. Correct? Sophia is writing, the market is closed today, so I won't lose any money again. Yes, for all of those who are watching today's live streaming session, today's Indian stock market is closed. We have Guru Nanak Jayanti today, so as of today, being the 15th of November, the Indian stock market is closed. So, for those who are currently watching today's live streaming sessions, we will be focusing or basically shifting our focus from the Indian stock market to the Forex and gold markets, right? When we get such opportunities in terms of holidays, we want to utilize the time in talking more about Forex and gold, right? Because that is where the real money, the real profits can be made. All right, let's start today's live streaming session with a quick introduction about the one and only Harsh, right? I am Harsh. I have 8 years of trading experience. I have been trading the financial markets for 8 years. I specialize in trading Forex as well as the commodity markets such as gold, oil, silver, as well as US indices, right? Such as S&P 500, Dow Jones 30, and the Nasdaq 100. We are currently looking at the Indian markets as well, whereby we analyze the Indian indices, right? The blue chip indices such as the S&P 500, the Sensex and the Nifty, as well as we scout the entire markets for analyzing and identifying opportunities on Indian stocks. I am more of a technical trader. I specialize in technical analysis such as supply and demand, price action, order flow analysis, swing analysis, wave analysis, as well as Fibonacci retracement analysis as well. When it comes to technical analysis, it is quite exhaustive. It's quite extensive. It's very huge in terms of there are so many indicators. There are so many what we call. There are so many ways that we can analyze the markets. But nonetheless, these are the specialities in which I focus. And talking about dolphin markets, here at dolphin markets, our main goal, our main aim is to showcase our trading potential when the stock market is open, and to showcase that yes, it is possible to make money. I want to ask each and every one of you, how many of you think it is possible to make money in the stock market? And how many of you think it is maybe not possible to make money in the stock market? Remember, yes, today the stock market is closed, but we still want to, understand. We need to have an interaction between me and the beautiful members of this community. All right. So I'm pretty sure everyone would be saying that, yes, Harsh, we are aware that people are making money, but maybe we do not know how to make, or we do not have the right mentor, the right guidance, right, for navigating the financial markets. But nonetheless, that is exactly what Harsh is here for. At Dolphin Markets, our main goal is to provide that value, to provide you with that service, in terms of generating profits, right? So people need to understand that we have been, diligent when it comes to maintaining our track record. We maintain our financial analysis sheet that showcases on the date the trade was taken, the stock, the name of the stock on which the trade was taken, the opening time, the direction, and the entry point. Once the trade is placed into action and during its movement towards profit, we also mention as and how it comes closer to profit, we inform you in terms of the date at which the trade was closed, the take profit level, as well as the profitability percentage that had been made. So we are very clear, very meticulous, very structured when it comes to providing you a consistent, right, a consistent stream of making profitable returns. We have been providing you with these hot stock recommendations all the way from 18th of September, right, till 7th of November. As and how we are coming across new opportunities, we will provide you, right? Just to be clear, um, it's just the last 2 months, right? With the most recent data being provided at 7th of November, which is last Thursday, correct? So exactly 1 week before. So you can be well rest assured that we are updating our sheets based on the current market conditions, right? All the data that you are currently seeing is always updated on a real time basis. The moment a hot stock opportunity, a hot stock recommendation is observed, I will be the first ones to provide you with the trading opportunity to make money. So as you could see, just based on last Thursday, we were able to provide you with two trading opportunities, two hot stock recommendations on D-Dave Plastic and on Ashima Limited. And these two trades were closed by Thursday and Friday, right? Last Thursday and last Friday. And we were able to make quite a good, reasonable amount of profit of 12%. This just showcases that just based on last week itself, we were able to hit good targets, right? Good profitability values. We have trades that are currently running. The moment a hot stock is shared, we make sure to, update our sheets on a real time basis and let people know that yes, trades are running, trades are happening, as we had provided just yesterday. For people who are tuning in for the first time, please make sure to be present for all the live streaming sessions. We have our live streaming sessions all the way from Monday till Friday, right? Monday, Tuesday, Wednesday, Thursday, Friday, and I, Harsh, will personally make sure to provide you with three live trading sessions. The current live trading session, which you are currently viewing, is the first live trading session. The second live trading session generally happens around the market closure, right? And the third live streaming session takes place after the stock market is closed, and then we focus more on education. Since today the Indian share market is closed, we would be focusing more on Forex and gold, right? Because that is where you have more opportunity to make good amount of money. So the reason for showcasing you these analysis sheets is for you to understand that yes, we have been consistent in booking profits by providing you with trading recommendations and booking profits, and at the same time we are providing you the most recent hot stock was yesterday, right? And they are currently running, so do not worry. Like I always say to my viewers and my clients, that when Harsh is here, there is nothing to fear. We will make sure to provide you all the details, right? We follow a very strict and meticulous and structured format when it comes to placing trades. We let you know where to enter, where is our 5% profit, and the moment prices are coming closer to the 5% profit, we will let you know in terms of when to close so that you can book your profits, you can make money. All right, for trades that are going against, remember, the markets are dynamic, they will go in either direction. The markets are based on probabilities, the markets do not run on certainties, but nonetheless we will do our due diligence, and as and how the markets are improvising, we will keep you updated. All right, so let's talk about today's right. Today we will be, since the market is closed, let us dive directly into the charts. All right. So today's focus will be completely based on forex and gold. Right. Not just today's first session, but the second as well as today's third session. We will be looking completely based on the international markets. Correct. The forex and the gold markets. People are very aware. Are very. I mean, I hope people are aware that since the onset of October, the prices of the Indian index has been quite, has been bearish. There has already been a correction of almost 10% in just a month, right? All the way from the last week of, I guess, September till currently, right? The second week of November. So almost a month and a half. So during this time period, there has been a correction in the Indian index, and people are being skeptical. People are, investors are pessimistic, right? They are uncertain. Why is there so much of bearish pressure in the Indian economy? Now, when it comes to the bearish pressure in the Indian economy, there are various macroeconomic reasons, correct? First and foremost, we have the geopolitical uncertainty. Second, we have the FIIs, right? The foreign investment institutions pulling out funds from the Indian economy and parking their funds into other economies of other countries which are providing better investment growth opportunities, such as China and the United States of America, as well as the quarterly earning report for a lot of the companies that have been, informing the public about their earning reports have not been up to the mark. So there has been a lot of skepticism. There has been a lot of, fear in the markets in terms of why the Indian stock market is not performing that well, and that is the reason why we would be focusing our live streaming sessions for today based on forex and the gold markets. Let me remind everyone who has recently joined that since today is Guru Nanak Jayanti, it is an Indian public holiday, so the stock market is closed. So we will be talking about the forex and gold markets. All right, let's go and talk directly about forex and gold markets today. We would be focusing more based on a technical analysis viewpoint. All right. So do not worry. We would be focusing on, the basics of technical analysis. Then we would dive on into the mid level and also the advanced level. So today's entire focus will be on forex, gold, as well as based on the technical analysis. All right. So let us start in terms of quickly understanding the basics, right? Let us quickly first cover up the basics in terms before we jump into the forex and gold markets. Since we will be focusing on technical analysis, let us be very clear when it comes to understanding what exactly are you seeing on a price chart, right? I'm pretty sure a lot of you would be clear in terms of what exactly we would be talking about. But for those who are, who do not have much knowledge, who do not have much experience in the markets, it is also for them. So let me start quickly with the explanation of candlesticks, right? Very, very, very important. And for people who are also viewing this live streaming session, let me quickly, make it a revision for people who are already aware of this too. All right. Yes, Sophia, right. The market is closed today, so I won't lose money. Do not worry, Sophia. When Harsh is here, there is nothing to fear. Once the markets start again in the next week, we will provide you with more better trading opportunities that can make you more money, all right, more profits. So quickly, for people who are not aware of what charts look like, correct? So we have charts. Now, what are charts? Charts are basically data points that are plotted on, a price axis versus a time axis, right? So the vertical line on the right indicates the price, and the horizontal line at the bottom indicates the time, right? So whatever you're seeing in terms of the candles, right? So what you're seeing are called as candlesticks, right? A quick and a quick glance through the basics, because it's very important to keep be aware of what exactly are the basics, correct? We just want to start with the basics, and as and how time progresses, we will advance to the next level, right? All right, so there are basically many types of charting tools when it comes to how you want to portray price on the chart. Some people are familiar with the bar charts, some people are familiar with candles, some people are familiar with line charts. So there are many ways in which people can look at charts, right? We as technical analysts are always preferring a very visual depiction of price movement. So we prefer to use candlesticks. Now, whatever you're seeing on the chart, those individual bars that you see on the price chart are called as candlestick. Now, for people who are aware, let me give you a small quiz. All right, so I hope people understand the annotations. Let me quickly type it out so people can be aware. All right, we have only two colors of candles, right? There is no third color of candle. We either have a green candle or a red candle. Now people might also ask me, but Harsh, we can change the colors of the candle. Yes, you can change, but I'm talking from a very generalized perspective. There are only two colors of candle, a red color candle and a green color candle. I am not talking about those people who like to change the colors of the candles to purple, yellow, pink. I mean, it is possible, but let us keep it simple for everyone to understand. There are only two types of color candles, right? A green color candle and a red. Now, every candle will have a bar, all right? A candle body. We call this as body. Let me type it out quickly. So the body is the entire structure of the candle, right? And the ones that you can see, the black lines on top and on bottom of the lines are called as wicks. All right. So what do you mean by body and what do you mean by wicks? Now, as you can see, for a green color candle, the basic depiction of a green color candle indicates that price has opened. Let me mark it with an arrow. The price has opened and has closed higher. So the close will always be higher than the open for it to be a green color candle. Now, when it comes to the wicks are during that particular time. For example, if you're looking at the daily, during the entire day, the candle has been moving up and down, right? Everyone knows the prices are dynamic. So if the prices are dynamic, the candles will also be dynamic, right? There might be some bullish momentum coming in, then followed by bearish momentum. So based on that, you have these wicks. So wicks depict where during that particular time period, how much price has appreciated or depreciated. So we call it as low and high. The lowest point of the candle is called the low, and the highest point of the candle is called the high. Now, for a candle where the close is higher than the open, so for example, if price opened at 100 rupees, and by the end of the day, since we're talking about daily time frame, since the end of the day, from 100 price has closed at 200. So from 100 price has closed to 200, it is called as a green candle. Or the terminology used is called is the terminology used is called as a bull candle. Now, on the contrary side, if you have an open and if the close of that particular candle is below the open, it's called as a, any guesses? It's called as a bear candle. Remember, the highs and lows remain the same. They do not flip, right? Just because the open and close values are flipping does not mean that the high and low. The high will always be the high and the low will always be the low. It is only the closing price of that particular candle that denotes which type of a candle is it. Is it a bull candle or is it a bear candle? So when it is a bull candle, the prices have opened at a particular value, but the close has happened higher than the open. And for a bear candle, the open has taken place at a particular value, but the close has happened below the open price. So this is a normal depiction of a candlestick. Yes, it is very basic, but it is very, very, very crucial to understand, right? Let me show you examples. So as you can see, either we'll have a red color candle or we'll have a green color candle, correct? So when it is a green color candle, you could see that prices were at this level, which is, you can see on the price on the right hand side, the prices had opened at 1.08757, and during that day, right, because we are looking at the daily chart, you can see that prices from this particular price level eventually moved in an upward direction, and prices closed at 1.09356. So what we're trying to say is, if the close is higher than the open, it is a bull candle, a green color candle. Similarly, you can see the other candle right after it, it opened exactly where the last candle closed and it fell heavily, right? So this is a very strong bear candle. Red candle, bear candle. People can use the terms interchangeably, correct? And for the wicks that you can see, there was so much of bearishness, but by the time the candle closed, right, the prices had closed inside, indicating that there was, some kind of reversal taking place on the lower time frame. So these are the two kinds of candles which are basically called as a bull candle and a bear candle. I hope people are able to understand. This is the basics, all right, when it comes to candlestick formations. Now let's go on to the next topic. The next topic we would be covering would be based on support and resistance. I'm pretty sure a lot of you people are aware of support and resistance, but nonetheless, let me give you a quick review, a quick revision, right? And for those who are not able to, who haven't who are not aware of support and resistance, do not worry. I will explain it to you in detail as well. So resistances are areas where prices are, getting rejected from. The resistance is an area where prices are getting rejected from. So you can compare resistance to a ceiling, right? If you're standing in a room, for example, if you're at your home, correct, so you're standing on the floor and you have a ceiling above your head. So resistance acts as a ceiling. If you have a ball in your hand and you throw it to your ceiling, it will bounce from the ceiling and fall back down. Similarly, prices react from resistance or ceiling, and they're pushed lower. On the contrary, we have areas called as support, right? So support is an area from where prices are pushed higher. Now the support acts as a floor. Coming back to the example of us, standing in our homes. So we are standing on the floor, correct? So we are not going below the floor. The floor is holding us. And if you had to drop a ball from the air onto the floor, the prices would bounce and, would go up. Similarly, once prices comes to an area of support, the prices are reacting to the support, right? They move towards the upside. So we have support and we have resistance. So these are terminologies that are used, extensively. And this is one of the main what you call one of the main education bases from where people start to understand what exactly technical analysis is. So we have already started with technical analysis. We gave you a quick introduction about what exactly candlesticks are. We do not need to go into the history, though I can talk a lot about it, but let us stick to the basic, right, and to the most useful information. So candlesticks, then we have support resistance. Then let's look at certain structures right now in terms of double tops, double bottoms, and head and shoulders. All right, so let me give you, remember, these live trading sessions are directly focused on showcasing you real examples, right? Based on real charts, real price movement. So let me give you an example of double tops and double bottoms. So from the name itself, what do you mean by a double top or a double bottom? Let me explain it to you on the charts. All right, I hope people can see my screen. Double bottoms are basically where price which has reacted in the past and price is again reacting from that same price level. So when you have an area which is similar to support, but the terminology for double top or double bottom is based on the prices creating two pivots, right? So double tops and double bottoms are structures on the price chart that looks something like this. So if I had to draw a line, the prices would look something like this. Prices came down, prices went up, prices came down, and prices went up. So these are called as double tops, all right? Sorry, double bottoms, right? Or we call them as W, right? The letter W. So double bottoms, right? Similarly, like we have a double bottom, we would be having something called as a double top as well, right? So double tops are exactly the opposite of double bottoms, all right? Where instead of prices creating two valleys, it would be creating two peaks, correct? I mean, I'm giving the analogy of a mountain, right? So for a mountain, you have valleys which are at the base of the mountain, and then you have the peak of the mountain. So these are called as double tops and double bottoms, right? Similarly, double top, double bottom. You have another analogy, another terminology that is called as triple tops, triple bottoms. So there is no fixed structure when it comes to technical analysis. Remember, we do provide you with hypothetical examples in order to understand at a very basic level. But once you come to the markets are different. The markets are fluctuative, correct? And markets are based on practicality, right? So does it have to be exactly double bottom, double top? Can it be also a triple top, triple bottom? Please be aware that we are looking to identify certain patterns, correct? That are being repeated in the past, and the entire crux of technical analysis lies in the fact, it lies in the concept that if price has been behaving in a particular manner based on particular structures in the past, it should repeat the same structures in the future as well. That is the main crux of technical analysis, right? I hope people are able to understand. All right, these are some of the basic terminologies used in basic. All right, we are still at the basic level. Then there are people who are completely aware of what a trend line is. A trend line is nothing but prices reacting from multiple points, right? So for a trend line, let me show you an example. All right, so this is a very nice example. Let me denote the pivots. Right now people are also not clear about what a pivot is. Pivot is nothing but a turning point, right, of price. So if you can see my mouse, let me show it to you with an arrow. All right, prices had traversed in a bullish direction, right, in an upward direction. Prices came to a point from where prices could not continue up. Prices turned from this point and continued low. So such turning points are called as pivots, right? There have been people who have not been aware of the terminology. So pivots are such where prices have turned, clearly. When we are looking at the price chart, we are looking for structures from where prices are reacting. And the only way that we can identify certain structures from where prices are reacting are based on pivots. So as you can see, all the circles that I am marking are called as pivots. So based on a trend line, all right, based on a trend line, as you can see, prices have been moving, right? So a trend line is nothing but a line that is able to connect as many points of contact as possible. So we have a trend line where it had tested once, it had tested twice, it had tested almost thrice, right? So anytime a price is able to test, more than twice, it's considered to be a good trend line. So trend lines are basically where price, a line that is holding price. Now in terms of, let me delete whatever is not required. Okay, let me put the lines back. Let me delete the annotation so that people should not get confused. All right. Now, since prices are going in a downward trend, it is called as a bearish trend line, right? Bear trend line, bearish trend line. The terminologies can be different, but the concept or the meaning remains the same. Similarly, if you are looking at price charts where, for example, let me give you a clearer example. All right, in terms of looking at prices, where you have a line where prices have been tested, right? So we have, sorry, we have points of contacts where we have 1, 2, and 3. So such points of contacts where prices have come and created pivots and a line, a trend line is holding, such a trend line is called as a bullish trend line, right? So remember, when it comes to technical analysis, the prices can only travel in three directions, right? Either the prices can travel in a bullish direction and upward direction, or prices can travel in a bearish direction or a downward direction, or the prices can travel sideways, correct, or neutral direction. So we have looked at, different kind of movements, right? How come we are able to analyze the charts? How are we able to connect the dots and, get more points of clarity when it comes? So trend line is a very good tool, right? It's a very good tool in order to determine the direction of where prices are flowing. So when prices are continuing in the bearish momentum, and the trend line is connecting as many pivots as possible, it is called as a bearish trend line. Similarly, if prices are, in an upward movement, correct, and the points of contacts are being held by the trend line, it is called as a bullish trend line. Now people would be asking, Harsh, what about, neutral? Neutral is basically when prices are going sideways, right? Now neutral is always an area where prices are either just going in one direction or the other, so sideways, correct? So such movements are called as sideways. Now trend lines are, all right, neutral, right? Sorry, spelling neutral. So neutral or sideways, right? The markets can only travel in these three directions. There is no fourth direction, right? The markets are, two-dimensional. They can only travel in three directions, either in an upward trend, a bullish trend, in a downward trend or bearish trend, or a sideways or neutral trend. All right. Now that people are clear with the basics, we talked about candlesticks, we talked about trend lines, we talked about support resistance, we gave you some examples of what are double tops, double bottoms. Let us look at the next concept. For people who are aware of trend line, there is also an improvisation when it comes to trend lines, and they are called as channels. So when you are able to, duplicate a trend line and park it parallel to the opposite side of price, we have points of contacts, right, where prices have come closer. So these points are basically creating a channel, right? I hope people are aware what a channel is. A channel is a medium path for prices to follow, right? So between two channels, prices are oscillating. So if it is in a bearish swing, if the trend is bearish, we call it as a bearish channel, right? So trend lines and channels are, plus or minus used interchangeably. Some people prefer just to use a single line. Some people want more clarity when it comes to, all right, let me have a parallel line drawn across the opposite side of price, and it creates a channel. So you can clearly see the prices have been, oscillating between the two. Let me show you an example of a bullish trend line channel. Sorry. Similarly to the bearish channel, we have something as a bullish channel where prices are, making sure to oscillate between the two trend lines. Two trend lines, comprise a channel. Let me draw the circle so people are clearly aware. And pivots are very important because pivot points are something that are of crucial importance. All right, pivot points are nothing but turning points. Wherever you see a turn in price, that is called as a pivot. All right, then we have certain points where prices are coming closer and a channel. So when prices are in an uptrend, we call it as a bullish channel, right? Or bull channel, whatever you would want to call it as. All right. So we have bullish channel, we have sideways or neutral channel, as well as we have, you know the bearish channel. I'm trying to keep it, without using hypothetical examples. I'm trying to keep it real as possible. For those of you who are asking which chart are we looking at, we are looking at the euro dollar on the daily time frame. It's very vital to be clear of the basics. I'm pretty sure everyone is asking about Harsh. We want to know more about the mid to advanced level strategies. But let us start focusing on the basic, because if your basics are not clear, you cannot upgrade to the mid and advanced levels. All right. I hope people are able to understand this, correct? We looked at candles, we looked at support resistance, we looked at trend lines, we looked at channels. Now let us look at the next, a concept, and that is about breakouts. Right now, as you can see on the screen, when prices are creating pivots, right? So when a pivot holds from the bottom, when it creates like a double bottom, there is tendency for prices to continue up, correct? And if prices are creating, or if a trend line is holding, then there is tendency for price to hold and respect the trend line. But at some point in time, the prices are inevitably going to break, right? The prices cannot be within a trend line for unlimited amount of time. At some point in time, the prices are going to break the trend line, right? So when such a scenario takes place where we have prices breaking above the trend line, correct? As you can see, we had the trend line where pivots were holding the trend line, right? But at some point the prices broke. That indicated that the trend which was bearish has now shown, or has now confirmed, that the trend is over from bearishness, and the trend has shifted from bearishness to bullishness, correct? So that is what exactly you mean by a breakout, right? Let me type it out for you. We call these structures as breakouts. The moment price closes outside the channel, correct? These are called as breakouts. And these basically indicate a sentiment where, for this particular example, we were looking that prices had been creating lower highs and lower lows, right? I'm hoping everyone is aware of the terminologies called as lower highs and lower lows, right? When prices are in the downtrend, prices are creating lower highs and lower lows. When prices are in an uptrend, prices are creating higher highs and higher lows. So in this particular example, as you can see, once the last lower high was taken out, right? So sorry, once the bearish trend line or the bearish channel was taken out, it created something called as a breakout. Now once a breakout takes place, it indicates that prices are not holding the trend line, and there is high probability for prices to reverse, to change from bearishness to bullishness, right? For this particular example, so this is called as a bear trend breakout, right? We just call these as breakout trades. Now, whether it is a bearish breakout trade or a bullish breakout trade, this is a bullish breakout trade, because we are looking for prices going in the opposite direction. The current illustration that you can see on the chart is based on prices going in the downtrend and then breaking out to go back in an uptrend, right? So that is exactly what we are talking about. So these kind of breakouts are called as bullish breakouts, right? Where prices break out from the channel and continue in the upward direction. Similarly, let's look at it from the other example where we have something called as a bearish breakout, right? So when prices are continuing up, all right, I hope people can see when prices are continuing up, the pivot points are being held, right? We had this, we had this. Now, the moment the prices are breaking out, we again have something called as bearish breakout, right? Where when prices were continuing by creating, let me type it out. Now, when prices are going up, it is called as higher low, and it creates a pivot called as higher high, right? So higher lows and higher highs. So this is how exactly where prices keep continuing up, and the moment prices break out, that indicates that yes, the trend has shifted from bullishness to bearishness, right? I hope people are able to understand. So these are called as breakout, right? Breakouts, and these breakouts are important because these play a vital role in analyzing and understanding, all right, how the markets have are shifting sentiment. There is either bullish sentiment or bearish sentiment, correct? So these are examples of bullish breakout trades and bearish breakout trades. I hope people are able to understand. I hope people are now understanding that yes, we are, getting deeper into technical analysis of especially the forex and gold markets. So these have been of vital importance. Now let's go on to the next topic. All right, the next topic we will be talking about will be based on any guesses. Any guesses what we would be talking about? Let me search it for you. All right, so we would be talking about the head and shoulders, right? So head and shoulders are basically structures that are formed with the illustration of a head and shoulder. So let me give you an example. All right, so as you can see where the prices are currently being placed, the prices, let me start from this particular point. I hope people can see my mouse. So the prices were bearish. So prices were continuing down, creating lower highs and lower lows. Then prices, flipped the center, flipped the trend from bearishness to bullishness. So prices started from bearishness and started, getting turned into bullishness. So these are, before I get into the next, trading concept, it's very important to understand when prices are creating lower lows and lower highs, it is a bearish trend. And when prices are creating higher lows and higher highs, it is called as a bullish trend. All right. So now that we have explained the basics, let us come to the head and shoulder pattern. So head and shoulder pattern is nothing but a structure which has two shoulders and one head, correct? So I hope people can see the screen. Let me change the color to black so that it is easier for people to understand. And we have something called as a neckline. So let me just denote everything. So we have a shoulder. All right. So since this is on the left side, we will be calling it as the left shoulder. Then we have another shoulder, but since it is on the right side, we would call it as the right shoulder. And then we have the head, right? The highest peak between the two heads or between the two shoulder is called as head. So a typical head and shoulder pattern looks something like this, where we have a shoulder on the left, we are followed by a head, followed by a shoulder on the right, and the line that you can see below the head and shoulder pattern is called as a neckline. So a neckline is nothing but a point of reference between the two pivot points, right? So we have a shoulder, we have a head, and we have a shoulder. The head and shoulder pattern is basically, portraying that once prices break out from the head and shoulder pattern, let me denote it with a circle. this area, right? I hope people can see it. Yes. So this is called as a breakout, right? What we had discussed just a couple of minutes before. The head and shoulder pattern basically denotes that once you have a breakout of price in the opposite direction. So prices were currently prices were currently, in almost like an in a bull trend line, correct? Bullish trend line, and it created a head and shoulder pattern. So the moment we have a breakout, that signifies that once prices are closing below the head and shoulders candlestick formations, the prices will continue down, right? The prices will continue down. Prices generally will retrace back to the neckline, right? So the neckline is very important. Prices will generally retrace back to the neckline before continuing down. This is a very, typical example of a head and shoulder. I hope people are able to understand what I'm talking about. All right, let me make sure we are. All right, so this is called as a head and shoulder pattern. Now, there might be people who might be asking, is there any other, structure which is like on the opposite side? Because like you have been talking about bull channel, so there is a bear channel. If you're talking about a bullish trend line, then there is a bearish trend line. If you're talking about breakout, there is a bullish breakout trade, and then there is a bearish breakout trade. So similarly to a head and shoulder pattern, we have a structure that is the complete opposite of it, right? So let me showcase you an example of a structure which is called as, one second, let me just find it out. I need to be sure that I can give you the right depiction. We have such, okay, let me just draw it to you. You will get the point. So what I'm talking about is this. Since I showcased you how a head and shoulder pattern is looking, it basically denotes a structure that looks like this, right? So prices created a left shoulder, a head, and a right shoulder. The moment prices are breaking below the neckline, one second. The moment prices are breaking below the neckline, that indicates that yes, prices are going to continue. So this is a typical formation that I have showcased you, right? On the practical example. Now, this is a head and shoulder pattern. So for people who are asking, okay, is there any structure which is like opposite to head and shoulder pattern? Yes. And we call it as an inverse head and shoulder pattern, where rather than prices creating a higher left shoulder, a higher head, and a higher right shoulder, we have the structure on the opposite side, like having the opposite orientation, right? So the structure remains the same, where we would basically be having two heads, or sorry, two shoulders, the left shoulder and the right shoulder, followed by the breakout, right? So this is called as an inverted head and shoulder pattern, right? Very important. The terminologies are, different, but the concept remains the same. It is only the orientation of price. Here we had prices which were continuing up, and then they broke down to continue lower. So this is called as a head and shoulder pattern, just a head and shoulder pattern, right? And for the opposite side, we have the term called as inverted head and shoulders. So where the breakout takes place and prices continue up. So these are certain important but basic technical analysis when it comes to price. For people who are just using, even these basic technical analysis are very well ahead of people who are not even aware of how to look, what are charts, how, what is technical analysis. So for people who have been, looking at a live streaming session, I'm pretty sure that you have gained a good amount of knowledge. Rather than showcasing you slides or PowerPoint based on hypothetical scenarios, I'm going directly to the charts, and I'm showing it to you based on real market conditions, right? I mean, would you prefer a textbook example, or would you prefer someone who's talking based on the real market conditions, right? It is better like we talk more about, what is happening right in front of us based on the real market conditions, rather than talking about, just based on textbook example. Remember, textbook examples are also important, but today, since the Indian stock market is closed because of Guru Nanak Jayanti, we would be focusing on Forex and gold, and not just Forex and gold, but focusing on technical analysis, right? Providing you information based on technical analysis. All right, now that we have covered quite a lot of information, right? Candlesticks, support and resistance, trend lines, channels, breakouts. Then we went on to talking about double tops and double bottoms, triple tops, triple bottoms, head and shoulders, inverse head and shoulders. So there are much more, technicalities when it comes to technical analysis, but let us keep it, to the basic, and let us keep it as, descriptive and as practical as possible. All right, now let's jump from patterns to indicators, right? I'm pretty sure everyone is aware of indicators, everyone is understanding what indicators are about. So as you can see, let us start with the most commonly used indicator, which is called as a moving average. Now, for people who do not know what a moving average is nothing but the average price of the last X number of candles. So the line that you are seeing is basically calculated on a mathematical formula that calculates the sizes of the candles for the last X number of candles. Now, people would be asking, what is X? X is the length, right? Now, you indicators are, customizable. It is not that one indicator is, fixed. Different indicators will have different customization factors. So, if you're looking at a length of, for example, 20, this is how the candle plot this is how the indicator gets plotted, right? If I have to type another indicator in terms of, let's say, okay, 1 second, since we are using the free version of TradingView, we can use only two indicators at a time. Nonetheless, do not worry. So let me put another indicator, right? So as you can see, this one, if I shift the parameter, right, the length of the candle from the last one that I used was 20. So let me put 50, and let me change the line. Let me make it a little more thicker. So as you could see, we have a line that is based on a parameter of the last 20 candles, which is the blue color line, right? Let me make it a little thicker. And then we have another parameter of line, which is the 50. So the lines change. If I have to use another parameter, maybe for example, such as let's say 100, right? I mean, I'm sure a lot of you would be using, parameters like these. So if I'm using 100, the line shifts. It is basically depending on the length of the candle, correct? So the longer the length, the more smooth it will be, and the shorter the length. Now, for example, let me change the parameter from maybe from 20 to 5. You can see that the lines get too fluctuative, and that is where we would want to showcase that yes, parameters of moving averages are very crucial, and moving averages depict the entire sentiment when it comes to price movement. If the moving average, okay, now let me just remove one of the moving averages and let me put a standard moving average, right? Remember, there are many types of moving averages when we are going to talk about. We have simple moving average, we have exponential moving average. Now, what is simple moving average, what is exponential moving average? There is not much difference in terms of simple moving average. For example, if you have to plot, or let me plot it, and then it would be better for you to understand. So let me put a simple moving average, and let me use the same parameters. So for the previous moving average, I was using a length of 20. Let me make sure that the colors are different so that there is no mix and match. All right. All right, so the blue line represents exponential moving average and the orange line depicts simple moving average. All right, so what is the difference between the two? Remember, the parameters are exactly the same, but there is a subtle difference when it comes to exponential moving average versus the simple moving average. So for the simple moving average, the calculation is based on the last X number of candles. Since we are using 20, the indicator is calculating the last 20 candles. The calculation for simple moving average is based on providing equal value to the last 20 candles for this particular example. That is the entire concept of a simple moving average. But if you're looking at the exponential moving average, rather than giving equal weightage to the last 20 candles, it will give the most weightage to the most recent candles, right? It will not give equal value to all the 20 candles. More weightage will be put on the last candle, subsequently the next previous candle. Like the candle which is currently here will be given the highest weightage, followed by the next candle, it will be given little less weightage, followed by the next candle, the next previous candle, yeah, the next past candle, it will be given less weightage, so on and so forth. So EMA is more, dynamic. It's more in contrast to the real price action compared to the simple moving average. But like I had said, since the values are the same, the moving averages are not that different. They are plus or minus it. Remember, we are using moving averages to gauge, to understand the sentiment of trends, whether prices are bullish or prices are bearish. Whether we are not looking for moving averages to be precise, because indicators are never precise. Indicators work on mathematical data, and data is only accumulated by indicators based on past data, right? So if you're trying to use an indicator to predict the future, yes, you can use it as a form of analysis, but do not, be dependent on the indicator as well. Coming back to which indicator you would want to use, you can prefer it to yourself. If you are asking what Harsh uses, I use the exponential moving average, right? So I would be deleting the orange line and let us look at the exponential moving average. I hope I'm able to provide you with, structured and content that is useful, that is adding, value to you. So when prices are above the moving average, that indicates bullish sentiment, right? It's basically meaning that the trend is bullish, right? And if prices are below the moving average, that basically indicates that it is a bear trend, right? The trend is bearish. So we have bull trend and bear trend. Now, when prices are, sometimes above, sometimes below, and are going sideways, that is basically sideways, right? Like I had mentioned to you right at the beginning, the prices can only travel in three directions, either in a bullish direction or an upward direction, or a bearish direction or a downward direction, or a sideways or a neutral direction. So when prices are above the moving average, that indicates that there is bullish sentiment, the trend is bullish. When prices are below the moving average, that indicates that the price, the sentiment is bearish, the trend is bearish. And when the prices are cutting across the lines, right? So we have a neutral direction as well as over here. So these indicators can be used as a form of analysis to get better in terms of visualizing. All right, what is the current trend? Is it sideways? Is it bullish? Or is it bearish? So moving averages are a very good form of indicator, right? Now that we were talking about moving averages, now people might ask me that, Harsh, can we, have more? confluence or more confirmation in terms of how will we be confirmed to know in terms of where to enter and where to exit. So using that question, let me provide you another illustration. So people are using one single moving average, right? I would preferably use one single moving average. But for people out there, for our beautiful community members, if they want to have more confirmation, right? You can use something called as a double moving average, right? So we can use something called as a double. So it is all based on the parameters. Sometimes people are using one moving average with a parameter of 10 and the other moving average with a parameter of 20. So you can play with the values. So we have 10, 20, or 20, 50, 50, 100. Remember, the bigger the length of the moving average, the smoother it will be, but the more lagging also it will be. So let me just give you a simple example of a 20 versus the 50, right? These moving averages are, used by a lot of people across the globe. And so let me put it and showcase it to you. Let me change the color to orange. All right, I hope people can see, right? So what is basically a double moving average? A double moving average, or there is something called as a ribbon moving average, which has more than three. Sometimes it can even plot up to 10 to 15 moving averages. It looks very beautiful, but it will get complicated, unnecessarily. So we will just talk about double moving averages. Now, double moving averages are simple. Whenever you have prices, wait, the lines are not too clear. Let me change the lines. One second. Let me shift the inputs to a bigger time frame. All right. So when you're looking at moving averages, one moving average is also good. But if people are asking they want more confirmation, we can use a double moving average. So two moving averages with different parameters, and they can be used for confirmation, right? Now, what do you mean by confirmation? I'm talking about certain structures such as these certain patterns where you have the moving averages intersecting, right? So when moving averages intersect, they can only intersect based on two situations. Either prices can intersect and continue higher, or they can intersect and continue lower. So we have only two forms of intersection, right? Either prices are intersecting and continuing higher, or prices are intersecting and continuing lower. Now, such phenomenons where the intersection takes place and prices are above, it is called as a golden cross, right? See, we are advancing little by little, step by step. We are getting more, advanced in our technical analysis. So now I hope people are understanding that yes, we started with the basics and now we are advancing slowly, slowly. All right. So such a term where prices intersect, right? Prices intersect and sorry, the moving averages intersect and prices are above. Such a scenario is called as a golden cross. On the contrary, when you have a similar intersection taking place, all right, let me show it to you with an arrow. So, like I said, once the prices intersect and once the moving averages intersect and prices are above, we call it as a golden cross. Once the moving averages intersect and prices are below, it is called as a dead cross. I mean, these are terminologies which are, written in the handbook, right, of technical analysis. So, anyone who is asking, Harsh, are you using these terms or is it, used by everyone? It is used by everyone, right? This is not something that I have invented. These terminologies are mentioned in books pertaining to technical analysis. So we have something called as a golden cross that basically denotes that yes, prices will be continuing up, and when there is a dead cross, when the moving averages intersect and prices are below the moving averages, that indicates bearishness, right? That indicates bearish presence. So I hope people are able to understand I hope I have been able to provide you with good value. Remember, I have been doing my best in terms of informing you about technical analysis. Since today's day has been basically where the English share market is closed, we are completely focusing on us talking about the forex and gold markets, and not just talking about forex and gold markets, but talking more about technical analysis, right? Everyone out here who are attending these live trading sessions come with two purposes only. One is to earn by making profits, and the second is to learn, right? And that is exactly what we are showcasing. Since the markets are closed, since the Indian share market is closed, we are talking about technical analysis, right? And we will be talking more in depth during the second live streaming session. So do not worry. Like I say to all my viewers and my clients, when Harsh is here, there is nothing to fear, right? So we talked about, let me give you a quick summary. We talked about candlesticks, how a candlestick looks, what are the different colors of candles and what is their characteristics, what is a bull candle, what is a bear candle. We talked about trend lines, what is a bearish trend line, what is a bullish trend line, and what is a sideways trend line. We talked about channels, right? When you duplicate a trend line and put it onto the opposite side of price, it creates a channel, right? We talked about uh, we talked about double tops, we talked about double bottoms, we talked about support and resistance, the crucial parts of the basic but crucial aspects when it comes to technical analysis. What is a support? What is a resistance? Then we talked about double tops, double bottoms, triple tops, triple bottoms. We talked about head and shoulders, right? Not the shampoo head and shoulders, but the candlestick formation, head and shoulder pattern. We even looked at the inverted head and shoulder pattern. Then we came on to understanding indicators, right? So we started with the information of talking about moving averages, how moving averages work, what is the calculation or the concept behind a simple moving average and an exponential moving average. What Harsh prefers is exponential moving average. Then we talked in terms of having more clarity when it comes to getting more confirmation. So we talked about two structures or two types of confirmations based on using double moving averages, and that is a golden cross and a dead cross. So golden cross and dead cross are two, what you call indicators which we can use to analyze and get confirmation in terms of, is the trend bullish, is the trend bearish. If the intersection takes place of the moving average when price is above, that indicates bullish momentum, and once the moving averages intersect with prices being below the moving average, that indicate bearish, right? And yes, there are times when the markets are neither bullish nor bearish, right? Let me just show you that example as well. Something like this. So certain structures where prices are neither bullish nor bearish. So you can see there the moving averages are cutting. If there is a lot of crisscross taking place, that indicates that the markets are going sideways, right? There is neutral sentiment, something like this, where prices are cutting but prices are going sideways. So these are the only three things that prices can do. Either prices can be in a bullish trend, can be in a bearish trend, or can be in a neutral or sideways trend. I hope people have been good in understanding. I hope I have provided you with a good amount of information. Yes, today's session has been mostly based on Forex and gold and mainly focusing on technical analysis, right? So do not worry, we will be talking more in depth in the next live streaming session where we will be, diving much deeper into little more advanced concept, a little more advanced trading concepts. So I hope everyone has a great afternoon. Right now it is 1 o'clock Indian Standard Time and 11:30 Dubai Standard Time. Please make sure to come back again for the second live streaming session. We will talk more about the next advanced level of technical analysis. All right, so please make sure to come for the second live streaming session, and until then, have a great afternoon, and I will see you later. All right, namaste and take care. Bye bye.